right, Bitcoin just had one of its biggest stress tests we've seen in a rather long time. It's on the rise, but are we in the clear? What are the indicators to look at to see if the market is going to continue to rise? We're in a bear market. Is the 4-year cycle dead, or are we going to just absolutely run to new all-time highs? Let's look at some data. Let's look at some trends, some charts in the news, and make the most educated guess that we can. Again, not financial advice, but the whole goal is how do we help everybody perform the best they possibly can, keep their cool, and everybody win. All right, so let's take a look at this chart here. Okay, so we can see this chart sends a pretty clear message, right? So we've got the support line down here that's been very consistent, and then we also drew the resistance, right? And this is the resistance of previous all-time highs through the Bitcoin blow-off tops, right? 2013, 2017, and 2021. Now we would expect to see that blow off top, right, in about October of 2025 based on that 4-year cycle. I believe the 4-year cycle, it looks like it's been broken. And here's why I say that is if the 4-year cycle is not broken, that would indicate that we should see a dramatic pull from the top. Most recent all-time highs where we were around that 126, 126 back in October, and we have seen a 30% pullback right below around $80,000. 30% pullbacks are very common in a bull market. In a bear market, we would expect anywhere from a 70 to 80%. And actually, we've done analysis on this, and the pullback would be right around, let's just pull it up here. So if we were at 126, and let's say we get a 70% pullback, then we are at about $38,000. I personally don't see Bitcoin getting to $38,000. That would disrupt this entire chart over pretty much Bitcoin's existence would be completely broken, right? We would drop significantly below all of these marks, and it just doesn't feel that way. Could it happen? Yeah, of course it could happen, but it just doesn't feel that way. Okay, so I say that to share some news, some trends, some data that could give us an insight: is Bitcoin really going to run or not? And what's so cool about this is that Bitcoin has been proven to be very resilient with this chart. So you can see multiple times we have come to this bottom here, right? This support level, and we have bounced up, right? And you can see recently, most recent time we were there was December of 22. This was the FTX collapse, and that was about, we were in the $16,000 range, okay? And you can see we have touched this range multiple times. So September of 23, right? And then we've been riding above it, and we have recently touched it, okay? And so what I'm saying is that I think the 4-year cycle might be broken. Nobody knows. Might be broken, and it could be closer to a 5-year cycle now. And this is less based around arbitrary time on the calendar and more based around the business cycle and liquidity in the market, okay? And so what you can see here is that the Fed has put out, said that they are winding down balance sheet contraction amid tightening money markets, right? So the Fed has literally said, we can't continue to keep tightening these markets in the liquidity there is. And they announced in December of 21, they will start to change it. Fed announces balance sheet wind down on December 1st, right? December 1st of 2025. That is coming up quickly. We're seeing Bitcoin take a pop. We were at a low of 80,000. We're up closer to 92,000 today on Thanksgiving Day, right? That's a substantial pop that we've seen with indications that there's going to be more money in the market, right? The Fed is about to restart not only reducing quantitative tightening, but move into quantitative easing. And that's where the liquidity will come from. That was what will drive Bitcoin to all-time highs. They've already said that they are going to stop tightening, which means they're going to at some point start to ease and put more liquidity into the market. That liquidity will get poured into assets, typically risk-on assets. And what's the most volatile asset of all? It's Bitcoin. And that's where money will eventually flow. Not immediately, but eventually, right? And we take a look at this chart here. We're going to take a look at some of these charts. The Federal Reserve, look at this chart, right? Look at all of the tightening that has happened. Let me move this real quick so you can see the chart. Look at this. This is a very one-way trend, right? Of just tightening the federal bank reserves. They don't want it to be this low, right? They need some breathing room, right? And you can see this across the board. Now, the other thing that we're seeing is the spread, right? The spread highlights money market stress. A wider gap means higher borrowing cost versus what the Fed pays on reserves, signaling liquidity tightness. All of these things are saying that there's liquidity tightness, right? And it peaked in November of 2025. When was the last time it was that high? March of 2020. And what did they do after March of 2020? They printed like crazy. What did they put? They put what, 60%? Since 2020, they've added 60% to the money supply that has ever existed. We're in a similar environment in November of 2025. This just says they have to start printing money. This says there's not enough liquidity in the market, all right? They have made the announcements stating that they will wind down the balance sheet and everybody's looking at quantitative easing. And when is that likely to start? Probably Q1 of 2025 / Q2 of 2020. Of 2026. The reason I say Q1, Q2, you've looked at the charts. There isn't enough liquidity in the market. They will be adding that, and they need to pay off the debt. And on top of that, what you're actually going to see is in May, Jerome Powell is out of his position. Trump will appoint somebody to take over, and who is he going to appoint? He's going to appoint somebody that is aligned with what he wants to do. And what does he want to do? He wants to, A, he wants to print more money, but B, he wants to lower the 10-year, and so they have to buy more bonds, and so that's what they're going to they're going to do. So he wants to do a lot of things, and all that's going to happen, he's going to have somebody come in and just listen to what, and he's going to start doing it. So I do believe now Powell and the Fed has been kind of forced into a position where they need to do quantitative easing. They will start to loosen that up, and then whoever Trump puts in place, they're just going to flood this market, right? And I really do think, I'm hopeful, because we never know, nobody has a crystal ball, that we could really see a run up in price. Now, here's the interesting thing. I do see a change in the construct of how the market is operating, right? So you can see the last few cycles that were dominated by retail and retail FOMO. We got these really huge blow-off tops, okay? And these upper bands are quite a bit up there, right, on the log chart. Now, we've been operating in a more conservative manner ever since we really started to have institutional adoption, right? Which is what you expect. The more mature players don't want this crazy volatility. They want it a little more controlled. They want the upside. They want to control the downside. And when you control a little bit of the downside, it's going to affect some of the upside as well, right? So what we're doing is we're just operating within a tighter range. So what I'm not proposing is that, okay, so let's say we go out to, I'm not going to say that we're going to have this crazy blow off top. I think it'll be more conservative, but that should also mean the downside should be conservative. So if we go to May of 26, right, Jerome Powell is out, they start printing money heavily, and maybe they start to do that in Q1, but let's just go out to, let's just stay here in the month of May, okay? So if Bitcoin stays resilient and operates within this support band right here, this line, we could expect in May, again, no, we don't know what's going to happen, but we could expect Bitcoin to be around $112,000 as the support line, the low price, okay? So then let's say we start to operate and get closer to this upper band, which obviously we've done once, twice, 3 times, let's check what a fourth would be, right? Let's go to the month of May. We're going to run this up to the top. And whoo, boy, $282,000. What I am not saying is that I expect us to be at $1 million. I do not. Not in the next few months, right? Could we get to $287,000? I think we could. Now, my prediction, and again, I call out myself when I'm wrong. I'm wrong a lot, and every once in a while, maybe we're right. Okay, so I called the top. If we were operating within the 4-year cycle, I believe the top was going to be around 265,000 in October of 2025. I was obviously wrong. The reason I got to that is because this floor has been so consistent, right? And if we operate under the model that the previous all-time high creates the next floor, right? So let's go take a look here. Let's use one of these. So previous all-time high was 20,000, okay? This was back in 2017. Well, the floor, I get it, it's a little below it, but it's within the range, right? 19,000, 16,000, FTX kind of forced the market down further than it probably should have. What that tells us is that the all-time high should be around, or I'm sorry, the low for the next upcoming 4-year cycle, I shouldn't even say 4 years anymore, I should just say the next cycle, should be around that 69,000, okay? About what it was, here we go, about 69,000 right there, okay? So if we have, and most of these pullbacks have been anywhere from, they kind of get smaller. What was it? It was in the 80, it reduces by about 3-4% per cycle from all-time high to low. And it's been about 83%, then 80%, then 76%. So we've had these, right? So I just pretty much operated off of, if we know the low is the previous all-time high or around that, and then we just back into what the eventual pullback from the blow off top could be, then we land around $265,000 with a visiting about $69,000 as the floor, right? It's oversimplified, okay? What's looking like, if this plays out, we could be in that mid 200s range somewhat quickly, right? And even if this runs, let's say this gets extended for an extra 12 months. So we're on a 4 or 5 year cycle, okay? If we go here and we just want to put an estimate around 250, we don't even need to touch the upper range, which we have done multiple times. We don't even need to touch this upper range up here. If we're going to live right around here at 250 in October, that's even conservative, right? Because most of the times we've hit this more solid purple upper range bar. So even if we don't get there, that'll be interesting. Now, if that then bottoms out, right, we could be looking at, what are we looking at? 143, that seems a little aggressive. I do think we could still get, with a blow off top, we can come back lower. I don't know. We got to figure that piece out. But here's the gist. This is what we need to pay attention to. We need to pay attention to the Fed winding down the balance sheet. We need to pay attention to signs that the Fed is going to start doing quantitative easing. And all of the data is saying that we are near these all-time lows or all-time highs, whichever end of the spectrum you're looking at, that something needs to change, okay? Something needs to change within this marketplace from a liquidity standpoint, right? That's what all of this data is saying, and you're starting to see the signals from the Fed as well. We get Jerome Powell out in May. Trump puts in somebody that is just going to simply follow his requests. Market should pump, and as long as Bitcoin rides above this line, this range here, which it has been consistent, we could be looking at some interesting all-time highs ranging from 200,000, and let's just run it out a year, to about 400,000. And if we go all the way crazy, Josh Mandel called what he called 444. You're looking at 444 1 year out in December of 2026. Again, I don't know if any of this stuff's going to play out, but it's a fun way to think about it. What do you guys think? Do you think that we have broken the 4-year cycle? We are now in a longer 5-year cycle. I mean, we don't even know how long the cycle could be. What are your guys' thoughts? Do you think that we're entered a bear market, or we're just testing some resistance levels and we've got higher to run? Like and subscribe. Put your comments below on what you think is happening in the marketplace and if we're going to see a bear market or this is just the start of a wild bull market. So thank you guys. Keep stacking those sats. Stay sovereign. Enjoy your day and Thanksgiving.